The Federal Reserve only has 20 hours and 34 minutes to make a decision on what they're going to do with the effective federal funds rate. And that decision is going to drastically affect the cost of goods and services with inflation in the United States, along with unemployment teetering on the edge of destruction as we get closer and closer to a recession. In this video, we have to discuss the 10-year to 2-year Treasury yield curve inversion and what this means compared to the past, and realistically how much longer in this bull run we have before an absolute meltdown in the stock market and the crypto market occurs, wiping out 99% of baby boomers, millennials, and the newest generation that are investing into the markets, expecting to strike it rich. Well, I have some shocking news for you in this video about the Fed's next move that is going to completely change the game for everybody. I'm going to break down exactly how much time we have left in the crypto bull run to capitalize to make the most amount of money possible. We're going to talk about the XRP, the US dollar price chart, compared to Bitcoin and what happened when Bitcoin broke out from $70,000 upwards of $100,000 now, and where that could put XRP in the near term as we head into 2025. On top of that, what the world's largest exchange, Binance, just did with XRP that is extremely bullish, what SBI Holdings is thinking about doing for XRP that could absolutely melt faces, and then we're going to talk about the H-bar to the US dollar price chart and some other altcoins to keep on your radar this entire bull run. So if you guys are feeling bullish, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So right now, Bitcoin's sitting at $105,000, XRP at $2.55. I don't know what's been going on with my computer lately, so if it's lagging and my video struggles to keep up with what I'm saying on the audio, at least the audio is coming through crystal clear. I swear every single time like the Macs do an update, I gotta be forced to buy a new computer here, even after I clear all my space. So if any of you guys are computer technicians and you want to drop a comment below, let me know what to do to speed these up. I literally have to sit here while I'm recording some of these videos and literally wait like 2 hours to 3 hours for a 20-minute video. So that's how much time and dedication it puts in. And that doesn't even count how long it takes to edit these videos. So I just appreciate you guys for watching them. So let's dive right in. Let's talk about what's happening on the CME Fed Watch Group right here, because we can see the target rate for probabilities for tomorrow for the FOMC meeting is 95.4% are expecting another rate cut. And it'll most likely be 25 basis points again. And there's only a 4.6% expectation for Jerome Powell to keep the rates the same. Now, the next meeting coming up, January, 81% are expecting them to hold the line after this rate cut. So depending on what Jerome Powell says, this number will likely shift a little bit. And then 50% are expecting another rate cut by March. So what we're seeing are the first early warning signs of a recession coming as the Fed raised interest rates all through 2023 or 2022 going into 2023 and then paused them all through 2024 and held the line. Well, if we zoom right here on the right hand side, the Fed started cutting rates in September. And if we look at the last 3 times that this happened, this led to a recession every single time. Now, I'm going to break down how long it took until this recession hit and then what effect this had on the stock market and the most likely case scenario for the crypto market. So hang tight. You guys are going to love this video. But you can see when the Fed really started cutting rates after July of 2019, it wasn't until February of 2020 when that recession hit. And then we went through COVID and the Fed was forced to cut rates rapidly to try and stimulate the economy. The time before then, you could see the Fed was raising rates from June of 2004 until July of 2006. They held the line until July of 2007, then started cutting rates, but it wasn't until December of 2007 that they said a recession was hitting, and that recession lasted all the way until June of 2009, and the Fed was forced to drop rates rapidly again while the economy was going through this recession. Now, this was also during the subprime mortgage crash in the stock market where everything collapsed, and the time before then was during the dot-com bubble boom. The Fed was raising rates. They paused rates in June of 2020 until roughly November of 2020. Then they started cutting rates, and by March of 2001, you can see this gray area is when they say that a recession is in, and that recession lasted from March 2001 until November of 2001. So the Fed is usually too late to try and save a recession, and by the time it hits, it catches virtually everybody off guard. And so the title And the thumbnail of this video is not clickbait. Virtually all baby boomers are going to be wiped out if they don't pay attention to this. So I'm going to break down the facts for you guys in this video based on the last several times that this took place. And you can even see prior to this, every single recession on this chart going all the way back to 1957. And in virtually every single one of them, the Fed had to drastically cut rates in response during the recession. So with the Fed right now just starting to cut rates, how much longer do we have? Well, everybody knows that the US national debt is out of control. It's at $36 trillion. And so this just keeps climbing higher and higher and higher. This is expected to be over 50 trillion by 2030. So I don't need to beat the drum there and talk too much about the debt because I want to talk about exactly how that's going to impact you. Because I talked about this a month or two ago. I said, watch inflation. Inflation is going to start to tick back up. And in 2025, I expect inflation to start swinging upwards of 3, 4, 5% or higher. Now, we've been going up since September at 2.4, then 2.6, 2.7 for November. So what the Fed is trying to do is keep inflation under control. And as inflation gets higher and higher and higher, that basically forces the Fed to continue cutting rates because what they do is they raise rates to bring inflation down. And that definitely worked over the past couple of years. Since June of 2022 is at 9.1%. And as you can see, in June of 2022, the effective federal funds rate was at 1.2%. And they raised it up after that rapidly at the fastest pace virtually in history. But they were too late. They were operating in response to high inflation. So the Fed doesn't really take precautionary measures. They just watch the markets. And when something's broken, then they act. And by then, it's always too late. So inflation was already up over 9%. And it was even higher than that due to price gouging. So this isn't even that accurate because it's virtually impossible to know how much companies are going to take advantage of you by jacking up prices in grocery stores because they have the perfect scapegoat, and that's inflation. They can just say, oh, inflation's high. Oops, sorry, we're going to double charge you on all this stuff. And so this is just the baseline that we look at here. So with inflation coming back down, well, this told the Fed that it was time to pause rates and eventually start cutting again. But as the Fed is always too late, this time is no different. They probably should have started cutting rates a little bit sooner. So now they're cutting rates right now and inflation starts to tick up. They're in a pickle right now. And the pickle they're in is their dual mandate because they want to keep inflation near their 2% target. And then they need to keep unemployment underneath like 4.3, 4.4%. And so you can see this little gray boxes right here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times going back to the 1940s at the tail end of that, each recession. And so on 100% of the past recessions, that's when unemployment drastically spiked up. So if we zoom in here on the right-hand side of the screen, you guys can see unemployment has been rising recently and it peaked out at 4.3, came down to 4.1, but November's data just came in, it's at 4.2. So they want to keep this under 4.3. If this starts to go up above 4.3, then the recession could be coming a lot sooner than everyone expects. So depending on how December's data comes in, that's going to come in January, we're going to be watching this very, very closely because Jerome Powell said that they want to keep it beneath 4.4%, I believe, in a previous speech. So unemployment is one of the most important indicators to assess the likelihood of recession because it's a direct connection to economic activity, consumer spending, overall confidence in the economy. The only problem is unemployment lags behind a broader economic slowdown because businesses typically try to lay off workers as like the last resort and the last measure until it's absolutely necessary, as firing employees comes with costs. However, once businesses begin to lay off workers in masses, it signals that revenue and profits are under pressure, businesses cannot sustain operations at prior levels, and the slowdown in demand has become widespread and entrenched. And so this just creates a domino effect like reduced consumer spending, business revenue declining, decreased confidence, reducing spending even more. And a thing that usually tips this over the edge is some unplanned economic shock, like the last one was COVID, the one before then was the subprime mortgage crash, the one before them was overly exuberant and overvalued .com stocks, and also another one of the most reliable leading indicator that tells us when a recession could be coming is the 10-year to 2-year yield curve inversion. Now, what this means, it's simply showing the difference between interest rates on short-term and long-term U.S. Treasury bonds. So if you look up on the screen right here, short-term yields like the 2-year yield are lower because investors expect stable near-term growth, and long-term yields like the 10-year are usually higher because investors demand a premium for tying up money for longer. So an inversion occurs when short-term yields exceed long-term yields, where the 2-year treasury yield rises above the 10-year treasury yield. So this reflects investor pessimism about the near-term economy. So when we look at this chart right here, you can see we were in a yield curve inversion during the entire bear market all through 2022, and we bottomed out down here at negative 1.06%. And I was making videos all the way back here. I said, watch this, guys. When we start to reverse back to the upside and we pass above zero and we go into positive territory, well, what we can look at is what happened in the past each time that this took place, going all the way back to 1979. And what were the biggest recessions that took place? Well, the biggest ones was 2007, 2009, obviously. Then we saw 2001 to end of 2001. And then this tiny one right here was COVID. This was really quick. It caused a V-shaped recovery in the market. And so with this massive yield curve inversion, what is this signaling on how big the recession could be that's coming? I think it's going to be absolutely disgusting, because when we zoom in here, look at this. We just passed back above zero and we've been teetering at it, coming back down, but now we're at 0.14. And so technically we passed above it in like September 5th, September 6th. So if I were to just mark on this chart for the Dow Jones Industrial Average right here, we're on the weekly chart, so it doesn't let me mark it exactly to the day, but we'll get close, September 3rd. That's close enough. And then I've marked every single point where you can see roughly in these vertical yellow lines when the yield curve went back into the positive, and then this red vertical line is when a recession hit. And it's happened after the yield curve goes into the positive rapidly. For example, if I were to measure all the way back here, you guys can see we roughly went into positive territory around the beginning of June 6th, June 7th, back in 2007. So right here, when the Dow Jones Industrial Average was around 13,700, and you can see this red vertical line is when they classified that a recession had started, and that was December 3rd of 2007. So that was roughly 170 to about 180 days after the yield curve went back into the positive. Now, also, you can see here on the relative strength index, we're on the weekly chart here. You can see this bullish trend while the chart was making higher highs and higher lows until this trend broke all the way down here. We saw the RSI break support right before the recession started, come back up here, get rejected from it as resistance, and then continue the sell-off all the way down here for the RSI to trade well below 20. Simultaneously, the Dow peaked out a little bit above 14,000, sold off, made a lower high right at the beginning of December, and then the bear market started and everything just got absolutely obliterated. During the dot-com bubble boom, you can see the yield curve inversion go into the positive roughly around January 2nd, and then it wasn't until March 1st of 2001 when the recession started. So if we go to the chart over here, you guys can see this vertical yellow line where the stock market had already topped out for the Dow, January 10th of 2000. And then by January of 2001, a year later, we were really just trading sideways, already in a downtrend, just forming lower highs and lower lows as well too. The RSI was in a downtrend as well by the time that recession started. And then we just saw a much deeper correction and deeper sell-off the following 2 years of about 35%. But from the peak to the bottom, that correction was about 38% for the Dow. So nothing like a crypto correction here, and nothing like the 2007 to 2009 crash. But where are we right now? If we come all the way over here, not to mention COVID as well too, when the yield curve went to the positive was around the beginning of September, the markets rallied up for another 153 days, and then we fell off of a shelf during the pandemic, which was a freak occurrence right there, but nonetheless, a recession. So because the yield curve on the right-hand side of the screen just went into the positive roughly around September 4th, if we were to measure right now, we're already 104 days in. Also on the relative strength index, you can see we've been in this uptrend since May of 2022 on the relative strength index. Now we are in an uptrend right now, forming higher highs. We've also been forming higher lows. And at some point, as we push potentially higher going into 2025, this trend is going to break and we're going to see a nasty crash in the market. So right now, the relative strength index is at 58 on the weekly. I mean, if we see in the top of the market right now, we see this support break, could we potentially see a back test and a continuation to the downside and see the bull market over right now to see this breakdown? Definitely possible. But I want to share why I believe that we haven't seen the top yet, and we're going to continue to climb a little bit higher going into 2025 until we finally do peak out for a final blow off top before the bear market really kicks in going into Q4 of 2025 and inevitably 2026. Because the first thing that we need to look at is the crypto total market cap excluding Bitcoin and where we are in this market cycle after Bitcoin's halving. You can see in orange right here when Bitcoin is halved what has happened the last few cycles. During this red box right here, we go through the initial, let's just call it phase one out of the bear market low, where we don't break out right away. We just kind of consolidate and range sideways between a support and a resistance. So you can see that in the most recent cycle, the support down here, was it like $430 billion? The resistance, either at $675 billion. If we were to move this red box on the right-hand side of the screen right here, we could even move the yellow to include this zone right here to about $700 billion. Once we break out of phase one, we go into phase two, where we break out of the resistance. In this case, last bull run, the resistance was June at around $125 billion. So we break above resistance and then we hold it as support and we build a new range on top of the previous range. And so as you can see, we broke out in November and even February 2024, we get rejected from a new resistance, which is essentially just the previous high on the complacency stage bounce before the bear market really kicked in on the 28th of March. And then we consolidate going into Bitcoin's halving. So this is what we are expecting, a sell-off going into Bitcoin's halving. This is exactly what happened. So on Bitcoin's halving or a little bit after Bitcoin's halving, we build on phase two. And so that's this yellow box right here on the right-hand side of the screen. Now, I believe we've just entered phase three, which is going to be the most explosive in the parabolic blow off top of the bull run. And that's pretty much the end of the market cycle before we go into an economic meltdown and a recession in the stock market and the crypto market. And so that's the green phase. This is the most exciting phase, but it happens quick. It's turbulent. It's rapid. As you can see right here, when we went into the final phase of the bull run, that was December of 2020. And until May of 2021, we rallied up, then we saw a steep pullback, final blow off top at the tail end of this Bitcoin halving cycle profit indicator, which essentially tells us when is a smart idea to start taking profits, and the end of the profit taking phase, which is essentially the top of the market. So it said that the top of the market right here was around January of 2018. It was off by a little bit because it was the 1st of January, whereas marking it 22 days later. But you can see the previous bull run, it was spot on within just a couple weeks. And so what is it saying now? It's saying the end of this bull run is going to be by November of 2025. So anywhere within these light green to dark green zones right here, starting roughly January 27th of 2025 until, let's just say, October of 2025. If you were to get extra risky with it, that's about November 3rd of 2025. I believe the majority of profits are going to be made during the first stage of this Bitcoin halving cycle profit zone. So that leads us roughly into March, because we just broke the resistance of this yellow phase right here on the right-hand side of the screen, which was high in March. And now we're building a base on top of that. So yes, we could potentially pull back in the short term to about 1.3 to $1.2 trillion. It's definitely possible before continuing higher for a final flush out before we go through the start of the profit taking phase, because it looks like that starts on the 27th of January of 2025, right after Trump takes office. And then depending on where the market is at that stage come January and February will really determine how much profit is left across total 2, which is the crypto total market cap excluding Bitcoin. So the smartest thing to do is to be positioned in the right altcoins before they explode and go into price discovery. If you want to learn how to find the next 10x, 50x, or even 100x altcoin in this video, listen to this. Our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1 and is currently still up over 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. 1,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. And the bull run is just getting started. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree. If that's a goal of yours, our goal is to help 1,000 members set their portfolio up for life this month. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside. Now, I just made this post inside of Altcoin Pro talking about XRP on the verge of a breakout, and I'll bring it up right here on the charts for you guys so you can see this, because right now XRP is sitting at $2 and roughly 55 cents on the left-hand side of the screen. We didn't hold this zone of support right here. Now, on the right-hand side of the screen, you could see what happened with Bitcoin during the tail end of October going into November before the major breakout, where you can see the simple ABC corrective wave as well too, where we see the high of March, the sell-off into May for wave A, wave B all the way up to this descending resistance, and then wave C all the way down here where it wicked at. And then when Bitcoin bottomed out around $48,000, it started to recover and we could see this channel. Now, it did trade briefly below this channel to flush out a lot of leverage traders, but as you can see here on the right-hand side of the screen, after that, we started to make higher highs, higher lows, higher high, higher low, inevitably a breakout of the previous resistance right here of about $70,000, coming back down to back test as support, trading a little bit below it. Remember, we don't have to be too exact on the charts here because Bitcoin, XRP, and other altcoins trade within ranges. They don't move to exact price targets, but we use that as a launch pad as support to break to the upside. And now Bitcoin is at about $106,000. So on the left-hand side of the screen, we can see some similarities here. Obviously, there's some minor differences, but we have a high by the beginning of December. We see this A wave right here, a B wave right here, a C wave all the way down here, similar to the right-hand side of the screen for Bitcoin. And even if we extend the resistance on the right-hand side of the screen for Bitcoin, it's where the B wave struggled to break out and got rejected from as well too, alongside XRP's B wave. So as you can see right here with XRP breaking out at $2.73, I wanted to see $2.60 hold. So prior to making this video, we were talking about that support. Now that XRP is breaking down within this bullish channel, making higher highs and higher lows, if we don't see XRP bounce and break out to the upside and make a new high, and we just stay within this channel, we would want to respect this ascending support right here to eventually see it bounce off of it, a clearing of resistance, which is where this B wave is right here on the left-hand side of the screen. Also where XRP just recently attempted to break out. We want to see this clear, hold as support, similar to what we saw happen here on the right-hand side of the screen for Bitcoin, and then use that support as a launch pad to finally break to the upside decisively and go back above the high of 2024. So whether this happens before January 1st or it happens sometime in January, I'm not too worried about when it takes place because there's so much bullish news coming for XRP. It is absolutely ridiculous. So I'm just holding XRP for the rest of this bull run until we are at least the start of the profit taking zone right here in this Bitcoin halving cycle profit indicator, all the way until October of 2025 to November at the latest. So because the entire altcoin market is still below the all-time high, that tells me that there's more room to run and more gas left in the tank for XRP. Even if we pull back all the way to $2.40, heck, we could even pull back a little bit further. It could get messy in here. See, this does not go according to plan every single time. You just have to have a long-term thesis. And my long-term thesis is that XRP is going to continue the uptrend, even if we see a liquidity flush down here. This is completely normal for stuff like this. Like look at Bitcoin after the C wave. We saw a liquidity flush down here. So if we see a liquidity flush for XRP, I'm just going to be buying this dip right here. Either way, you guys can see on the left-hand side of the screen where the stochastic RSI is right now with the D line at 2.32 and the K line at 1.85. So we're in oversold territory below 20, and where we were for Bitcoin, if we just look for confluence here, by the 4th of November, we were all the way down here in oversold territory as well too on this pullback before this massive breakout. So once this pullback for XRP is over, I would expect there to be a bounce to the upside. You know, I don't necessarily think that we're going to come down within these levels, although anything's possible. We are on the hourly chart on the left, and then on the right-hand side of the screen, we are on the daily for Bitcoin. So this was much more macro consolidation phase that took a lot longer. For example, from the C wave bottom to this inevitable breakout, it took about 93 days. And on the left-hand side of the screen, from the C wave bottom to where we are right now, we're only 7 days in. So anything is possible over the next few weeks for XRP, but there could be a retest of $2.42 before breaking $2.92, which would be this descending resistance. And after eliminating this level, XRP will be good for about $3.43, upwards of $5.85. Now, obviously, this is not financial advice. This is according to this post right here by Dark DeFi on Twitter. And so you want to take all that with a grain of salt, obviously, because the crypto market's unpredictable. You could definitely lose money in these markets. If you're buying high, you're FOMOing in, panic buying, and then you're panic selling when a price takes a dip because you can't hold for longer than a week if you lack patience. So we look at multiple angles of the market. For example, one angle is Binance is now holding over 1.8 billion XRP. It's a major accumulation signaling confidence in strategic positioning for XRP's future. So what do they know that the average retail investor doesn't know? If Binance is accumulating more XRP, they're bullish on XRP, even regardless of short-term pullbacks. They don't care about a 5 cent, 10 cent dip, even a 50 cent dip, because they know something big is coming. Now, is that the ETF? Are they just buying because of Ripple's stablecoin news? That remains to be seen, but here's some other bullish news. SBI Holdings could adopt a MicroStrategy Bitcoin model for XRP. Right here, if you read this, it says GAM Global Special Situations Investment Managers also recommend SBI to consider an XRP buyback program to further leverage its blockchain investment, similar to the strategy adopted by MicroStrategy in the US that's pushing the price of Bitcoin up. So SBI could use a small portion of its cash flow to purchase XRP directly. And SBI Holdings currently has an 8% stake in Ripple Labs. And by taking these steps, SBI can significantly close the gap between its market value and its NAV, estimated at $3.9 trillion in the Japanese yen. Now, when XRP makes that move, I would expect other ISO projects to do well. For example, HBAR, we can see HBAR holding support at roughly 27 cents. We see this descending resistance after this massive breakout right here. Now, we can also see a resistance to the upside at about 31 to 32 cents right here. That would need to clear for a trend reversal on the daily chart. What this chart reminds me of is a lot like Floki's chart. For example, on the right-hand side of the screen, you can see this massive green candle come in to rally the price up to a high, and then we see this sell-off and consolidation take place. Just like HBAR, on the left-hand side of the screen, you see this massive green candle come in for a high, and then we see the sell-off and consolidation take place where it holds the support. Even though it can wick below the support for a period of time, right here, it reclaimed it on the candle body closes. Same thing for Floki. We wick a little bit below it, but inevitably we see candle body closes above the support. So one of two things will happen. And how I trade this is I wait for one of these to take place. Number one would be either a break of trend to the downside and a back test as resistance. This would be like a short opportunity for the price to see further liquidation to the downside. And then setting proper stop losses as well too, in case it's a liquidation flush and then it's a bear trap and then the price just shoots right back up. So that's why stop losses are super important when you're trading pullbacks, because they could be bear traps or bull traps. Or number two is I wait for a breakout and a confirmed back test of a previous resistance, like you can see right here, to act as support to enter into a long trade before the price continues higher. And then of course I set proper stop losses below my entry point as well too. So I wait for one of those two. I don't buy into something like this because there's too much uncertainty on what could happen, whether it goes to the downside or the upside. I wait for a breakout and a back test. That's if I'm trading on leverage. If I'm buying spot, well, then I just really don't care because I'm buying spot with the intention to sell months later rather than day trading it. So for example, like if I were to buy, and I'm not telling you to buy right now, but if I were to buy HBAR right now at 28 cents, well, then my intention would not be to trade HBAR in the short term on a spot position. It would be to hold HBAR going all the way into like March of 2025, because regardless of whatever happens in the short term in this pricey, choppy, messy trading action, inevitably my thesis on HBAR is that it's going to be much higher from where it's at right now over the next few months as we lead it into the tail end of this bull run, rather than having to worry about what happens here in the short term. Same thing for Floki, because sometimes you might miss an opportunity waiting for pullbacks because then you see these massive green candles come in here and it might never come back to the zone to retest it as support, or it may not hold a previous zone of resistance as support. As you can see, it got rejected from it. So Floki did not clear the previous resistance right here on these candle body closes from the 20th of May until the 3rd of June. You could see we got rejected from it on these candle body closes. So we could come back down to back test this zone right here. And if the entire altcoin market breaks out higher, that's where I would expect Floki to see a bounce. So for HBAR's chart on the right hand side of the screen, we have this zone right here at roughly 31 cents. And then we have this zone up above it of resistance all the way up here at 37 to like 0.367 cents all the way up here. So what I would expect to happen for HBAR, if we see a break of this descending resistance, I would want to see a decisive close above the first level of resistance. And we could push all the way up here and then get rejected and consolidate, similar to what we see happen on the right-hand side of the screen right here for Floki. Come all the way back down, find a support, and then rebound off of that to go back into price discovery. Otherwise, if we don't, we just see continued selling pressure and a break of this support zone followed by a back test, then it could get ugly very, very quick and we could come down even further for altcoins. So I know this is not what you want to hear. It's like, we could go up or we could go down. I'm just trying to explain to you my thesis on how I trade in the short term if I'm looking to leverage short or leverage long any sort of crypto asset. What I wait for, again, as a quick reminder, number one, I wait for a break of support and I don't just sell into the initial breakout to the downside, because usually what we see happen is we see an attempted pullback into support as resistance before continuing the downtrend, or I wait for a clear trend reversal, which would be a break of a previous resistance, and then I enter into the pullback as support while setting proper stop losses just below my entry point for a potential rebound to the upside for a continuation of the new trend. And that's why it's important to zoom out on more macro candles like the daily, the weekly, or even the monthly, because then you could put the chart up next to key indicators like the MACD, the RSI, and the stochastic RSI to look for confluence of reversals. Now, if you guys want to learn more about how to navigate the markets correctly, how to trade, on top of everything you need to know about crypto, like the foundations, the building blocks of Web3, how to secure your crypto portfolio, how to dive into DeFi, how to research the right altcoins, and most important as we head into 2025, how to master crypto taxes, then make sure you join Altcoin Pro University right now. Just click the link in the description below. We have about 1,000 members right now, but the bonuses are still available for the first 1,000 annual members. You get access to our research team's 2-hour plus portfolio deliberation trainings, showing you how to construct a successful portfolio coin by coin, along with our crypto tax mastery course from our certified CPA. Again, I'm not giving tax advice, but we have a certified CPA who does. It's 13 training videos teaching you everything you need to know. And 100 plus expert curated classes, live weekly calls, daily market updates, and our global community to get your questions answered each and every single day, because the YouTube comment section below is a minefield. There's a bunch of impersonators, a bunch of spam accounts. That's why you want to join Altcoin Pro University with 1,000 members, because we're able to more closely monitor our crypto inner circle, because we can ban any spammers, and most spammers and scammers aren't going to pay the $97 a month or $970 a year, as cheap as that is. Plus, when you take action right now before January 1st, you're going to be grandfathered in at these prices, because the price is actually going to go to $197 per month where you can pay as you go, no contracts, no commitment. So lock in the prices right now. That $970 a year is going to go to $1,970 a year. So you're saving over $1,000 on the annual, plus you're locking in those bonuses as one of the first 1,000 annual members. And worst case scenario, it's not for you. You ask for a refund. That's completely fine. You're under no contract, pay as you go. We got our 30-day money back guarantee. Best case scenario is this works for you and you become our next massive success story. For example, in the community section right here, when I click on more at the top under the post your win section, there's just a massive amount of success happening in here. Like right here, 89% APY. Again, no guarantees here, guys, but you can see booked my vacation with profits from trading. This one right here in the first month of trading meme coins, turning $12,500 into over $29,000, 166% return in a month. This was just 6 days ago. Right here, less than a week ago, set this up in just 6 weeks, hit a 2x with lots of room to go. And also a massive airdrop win of $30,000 on the recent hype airdrop. So if you guys want to learn everything from airdrop picks, DeFi yield picks, different altcoin picks, get access to daily market updates, general discussion, major announcements, then check it out. I know you're going to love it. As always, I'll see you guys on the next video. As we back up our truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind because we believe the spending power of the dollar is going to keep going down in value based on inflation. The Federal Reserve will not be able to fix it. So you have to take full control over your finances. And that's what we're here to help you do with Altcoin Pro University. So I'll see you on the next video. I'll see you on the link below. As always, you know what to do. Stay bullish.